and welcome to the Property Wealth Podcast. Today we've got something really exciting to dive into. Have you ever thought about how stunning drone photography can transform your property listings?
Absolutely, Sarah. It's amazing how a great aerial shot can really showcase a property's potential and, grab the attention of potential buyers.
Right? I mean, who doesn't love a good bird's eye view? It's such a game changer in real estate marketing.
For sure. And today, we're not just talking about drones. We'll also explore how to leverage technology in your property investments, the importance of understanding your market, and some practical tips for making informed decisions.
Yeah, and we'll share some personal experiences too. Things that have worked for us, and maybe even a few lessons learned along the way.
That's the key, isn't it? Learning from both successes and setbacks. It's all part of the journey in real estate.
Exactly. So, whether you're just starting out or looking to elevate your investing game, we've got some valuable insights coming your way.
Let's get into it then. The world of property investing is evolving, and embracing new tools like drone photography might just give you that edge you need.
Definitely. So let's dive right in and discuss how you can use these strategies to build long-term wealth through real estate.
Sarah, it's really interesting how quickly technology is evolving and how it's impacting real estate. For folks over 40, this can feel overwhelming at times, but it's also a huge opportunity, especially with drone photography.
Absolutely, Mike. I think about how many people in that age group are looking at retirement, or maybe they're planning to downsize, or even invest more seriously in real estate. Using drone photography can really change the game for them.
Right, and I've seen it firsthand. There was this investor I worked with, let's call him Tom. He was in his late 50s, had a couple of properties, but he was feeling the pinch of inflation and was worried about his retirement timeline. He decided to use drone photography for his listings.
Oh, interesting. How did that work out for him?
Well, he was shocked at the difference it made. The aerial shots showcase not just the property itself, but also the surrounding neighborhood, parks, schools, and even the proximity to major roads. It painted a fuller picture,
Right, that makes total sense. It's like giving potential buyers a sense of lifestyle rather than just a house, which is especially important for people looking to settle down or invest for their future.
Exactly. And for Tom, it meant he could command a higher price on his listings. In a market where buyers are being more selective, those stunning visuals helped him stand out. It's all about that emotional connection, right?
Totally. And when people are making big decisions about where to live, especially as they think about their retirement years, it's about more than just the square footage. It's about feeling like they belong somewhere.
Another thing that Tom mentioned was how he felt more secure in his investments after using drone photography. It kind of reassured him that he was on the right path and that he could effectively compete in the market.
That emotional aspect is key. So many people in their 40s and 50s are thinking about wealth transfer to their families too. They want to leave something behind, and having a solid real estate portfolio can be a big part of that.
Exactly, and with inflation being a real concern these days, having tangible assets like property is a great hedge against that. It's not just about the numbers. It's about building a legacy.
Yeah, and I think many people underestimate how much that legacy means. I heard a story recently about a woman, let's call her Karen, who started investing in real estate in her early 40s. She wasn't super experienced, but she had a vision.
What was her vision?
Well, she wanted to create a foundation for her children. She took her time, educated herself, and eventually bought a couple of rental properties. When she used drone photography for one of her listings, she was able to show potential buyers not just the property, but also nearby amenities that would appeal to families.
That's a smart move. It sounds like she understood her target market really well.
Exactly. And now, as her kids are getting older, she's seeing that her properties have appreciated significantly. That's money that can help support their education or even their first homes.
This kind of strategy is especially important right now with the market shifts we're seeing. A lot of folks are waiting for the perfect moment to buy, but real estate is a long game, and having the right tools like drone photography can really make a difference.
For sure. It's about being proactive with your investments, not just reactive. And using innovative tools can help you navigate market uncertainties much more effectively.
And let's not forget about the current economic trends. People are more visually driven than ever. A great photo can catch attention in a crowded marketplace, especially online.
Absolutely. I mean, if you think about it, most folks over 40 are familiar with social media, even if they're not heavy users. They understand that eye-catching visuals can lead to more interest and ultimately better offers.
And it's not just about selling either. For those looking to rent, drone photography can highlight the property's features and its surroundings, which can attract higher quality tenants. It's a win-win situation.
Right, and this ties back to that emotional security we talked about earlier. Knowing that your property is appealing can give you confidence as a landlord or seller.
Exactly. And the best part is that it doesn't have to break the bank. Many drone services are quite affordable, especially when you consider the potential return on investment.
Yeah, and for those who may be hesitant about the tech side of things, it's getting easier every day. There are so many user-friendly platforms now that make it simple to incorporate drone footage into listings.
That's the beauty of it. You don't have to be a tech wizard to leverage these tools. And, when it comes to the emotional side of financial security, seeing your property showcased beautifully can be a game changer.
It really can. And for people over 40, it's about feeling empowered in their investment choices. They want to set themselves up for success, not just for today, but for the years to come.
Right, and understanding how to utilize modern marketing tools like drone photography plays a big part in that. It's about adapting to current trends without losing sight of your long-term goals.
Well said, Mike. So, with all of this in mind, what do you think are some core strategies that our listeners could start implementing today to make the most of drone photography in their real estate ventures?
So, let's dive into the core strategies, shall we? One of the most important things when it comes to property investing is really understanding the numbers behind your investment.
Right, like the 1% rule, for example.
Exactly. The 1% rule is a great starting point. It suggests that your monthly rent should be at least 1% of the purchase price of the property. So if you buy a property for, say, $200,000, you should aim to get at least $2,000 in rent each month.
That makes sense. But, not every market is the same, right?
Absolutely. Some markets might not hit that 1% rule, but it's still worth considering if the property has strong appreciation potential or other income streams.
So, if a property doesn't meet that rule, it isn't necessarily a deal breaker?
Nope, not at all. It's just a guideline. You'll want to look at other factors, like the demand in that area and the potential for value increase over time.
And what about the 50% rule? I've heard that one tossed around too.
The 50% rule is another quick way to estimate your expenses. It suggests that you should expect to spend about 50% of your rental income on operating expenses. So if you're bringing in $2,000 a month, you should budget around $1,000 for things like maintenance, property management, and vacancies.
That's super helpful. So if my rent is $2,000, I need to factor in $1,000 for expenses. But what about the mortgage?
Good question. The mortgage payment would come out of that, but the 50% rule helps you get a clearer picture of your cash flow. You need to ensure you're still making a profit after all that's accounted for.
Got it. It's like a balancing act.
Exactly. And speaking of balancing, let's chat about the cap rate. That's another crucial metric.
Right, the capitalization rate. It's a way to evaluate the potential return on an investment property, right?
Yes. You calculate it by taking the net operating income, which is your rental income minus expenses, and dividing it by the property's purchase price.
So if a property is generating $24,000 a year in net operating income and you bought it for $300,000?
That's a cap rate of 8%. Just take $24,000 divided by $300,000.
Wow, that sounds pretty good.
It can be. Generally, a cap rate of 8% or higher is considered good, but again, it varies by market.
So it's important to know your market trends as well?
Definitely. Understanding local market conditions can make or break your investment strategy.
And what about financing options? I know that can get a bit tricky.
Financing can be a game changer. You've got traditional mortgages, which are pretty straightforward, but also options like hard money loans or even private lenders.
Oh, I've heard about hard money loans. They're often used for fix and flips, right?
Right. They're short-term loans with higher interest rates, but they can help you secure properties quickly if you find a good deal.
And I suppose you'd need a solid exit strategy if you go that route, huh?
Exactly. Knowing how you'll pay that loan back is crucial.
And then there's the property type to consider. Some people prefer single-family homes, while others might go for multifamily units.
Yes, and each type has its pros and cons. Single-family homes are often easier to manage and can have lower tenant turnover, while multifamily units can provide multiple income streams.
I guess it depends on what you're comfortable with, right?
Exactly. Think about your risk tolerance and how hands-on you want to be.
And then there's the whole idea of diversification.
Yes, diversifying your portfolio can help mitigate risk. You might invest in different property types or even in different markets.
That's smart. I've heard some people say to stick to one area until you really know it.
That's a valid approach too. Mastering one market can give you an edge, but as you grow, branching out can open up more opportunities.
So, as you're evaluating deals, what's your checklist look like?
Well, I usually start with the basics: purchase price, potential rental income, and then I look at the expenses, including property taxes, insurance, and maintenance.
And don't forget about potential appreciation.
Right, and also consider the neighborhood's growth potential. Are there schools, parks, or businesses being built nearby?
Those are all great indicators.
Exactly. And I also look at the vacancy rate in the area. High rates can signal an oversaturated market.
Really good points. It's a lot to juggle, but it sounds like a solid process.
It is, but you'll get the hang of it. Just take it step by step.
And I suppose it's important not to get too attached to any one property.
Yes, emotional attachment can cloud your judgment. Stick to your investment criteria.
That makes sense.
And remember, it's also about learning from each deal, whether it's a win or a loss.
Absolutely. Now let's transition to some common pitfalls that people might face.
All right, so let's dive into some of those common pitfalls that can really trip people up when they're investing in real estate.
Yeah, I think that's super important. I mean, a lot of folks jump in with high hopes, but there are definitely some landmines out there.
Absolutely. One of the biggest ones I see is over-leveraging. You know, people get excited about a property and think, I can stretch my budget a bit, right? But then they might take on too much debt.
Right, and then what happens? They can't keep up with the mortgage payments if anything goes wrong.
Exactly. I had a client once. Let's call him Tom. He bought a multifamily unit thinking it would be a breeze to manage. He was really confident and ended up financing way more than he should have.
Oof, that's tough. What happened with Tom?
Well, he ended up with unexpected repairs, and then some of his tenants moved out. Suddenly, he was scrambling to cover the mortgage on a property that wasn't generating any income.
That's a real wake-up call. I guess it's a reminder to really understand your financial limits and stick to them.
Definitely. And speaking of tenants, that leads us to another pitfall: bad tenants. It's easy to overlook background checks in the excitement of filling a vacancy.
Yeah, I can see how that could happen. What kind of issues did Tom run into with tenants?
He didn't check references thoroughly, and he ended up with a couple who didn't pay rent on time, if at all. It turned into a lengthy eviction process, which just added to his stress and financial burden.
That sounds exhausting. So what's the best way to avoid that?
Well, you really want to dig deep during the screening process. Look for red flags like inconsistent rental history or lack of verifiable income. And trust your gut too. If something feels off, it probably is.
Right. Listening to your instincts is key. And I imagine ignoring cash flow is another big mistake.
You got it. A lot of new investors focus on the property's potential appreciation, but forget to consider whether it's actually generating positive cash flow each month.
Yeah. It's like, if you're not bringing in enough to cover your expenses, you could be in real trouble.
Exactly. I had another client. Let's call her Lisa. She bought a cute little condo thinking it would appreciate quickly. She didn't look closely at the numbers and ended up with a monthly cash flow deficit.
Oh no, how did she handle that?
She had to dip into her savings every month to keep up with the mortgage. It really stressed her out because she thought she was making a solid investment.
That's a classic example of not having a solid plan. So how can someone ensure they're on track with their cash flow?
A good rule of thumb is to run the numbers before you buy. Calculate all expenses, including property management, maintenance, insurance, and vacancy rates. If it doesn't make sense on paper, it probably won't in reality either.
That makes a lot of sense. And then there's the idea of timing the market, right?
Yeah, that's a slippery slope. Some investors get obsessed with market trends, waiting for the perfect moment to buy.
But the reality is, no one can predict the market perfectly.
Exactly. I know someone who waited for years, thinking prices would drop, and when they finally bought, they ended up paying way more than they would have if they just jumped in earlier.
I can see how that can happen. So what's the takeaway here?
Don't wait for the perfect time. Focus on finding the right property that fits your strategy and your financial situation.
And then there are those hidden costs that can really catch you off guard, right?
Yes, those can seriously add up. I remember a situation with a property that needed more repairs than the investor anticipated. They thought they could just paint and clean, but once they started, they uncovered plumbing issues and electrical problems.
Yikes! So what did they do?
They had to allocate a lot more funds than they planned, which pushed them into a tight financial spot.
That's why doing a thorough inspection up front is so crucial, huh?
Absolutely. Always budget for unexpected expenses, and consider getting a professional inspection before you buy, even if the property looks good on the surface.
Great advice. So to recap, it sounds like avoiding these pitfalls comes down to careful planning, thorough vetting, and being realistic about your financial capacity.
Exactly. And always keep an eye on cash flow. It's not just about getting into a property, it's about sustaining it over the long haul.
So if someone finds themselves in a situation where they've made one of these mistakes, what's the best way to recover or get back on track?
Well, first, acknowledge the mistake without beating yourself up. It happens to a lot of investors. Then, reassess your situation. Can you renegotiate terms with your lender, or maybe find a way to increase your rental income?
That's a positive way to look at it. It's about pivoting and adapting to the circumstances.
Exactly. And if you're struggling with tenants, don't hesitate to seek help from property management services. They can provide guidance and take some of that stress off your plate.
It sounds like the key is to stay proactive and informed.
Definitely. And remember, every setback is a learning opportunity. Use it to refine your strategy moving forward.
I love that mindset. So with all these lessons in mind, what should our listeners focus on next to build their property investment journey?
Well, I'd say start by educating yourself about the market and your local area. Then, network with other investors and professionals in real estate. Building a solid support system can really make a difference.
Such practical advice. It's all about taking those next steps with confidence and clarity.
Exactly. You've got this. All right, so now that we've talked about the benefits of drone photography, let's dive into some immediate steps people can take, to start incorporating this into their property listings.
Yeah, absolutely. I mean, it can feel a bit overwhelming at first, but breaking it down makes it manageable, right?
Exactly. So the first thing I'd recommend is to assess the tools you currently have. Do you have a drone? If not, maybe look into renting one or even hiring a local photographer who specializes in drone shots. There's no shame in starting small.
That's a great point. And if they do have a drone, they should check whether they're familiar with the regulations in their area. It's super important to stay compliant.
Right, and speaking of regulations, it's also a good idea to familiarize yourself with apps like SkyVector or AirMap. They can help you understand no-fly zones and where you can legally operate your drone.
Nice. Those are really useful tools. And once you've got your drone situation sorted, think about the actual photography. Plan your shots ahead of time. What angles highlight the property best?
Yes, and think about the time of day too. The golden hour, just after sunrise or before sunset, really makes a difference in lighting.
Oh, definitely. And for those who might not want to dive into drone flying themselves, there are platforms like Fiverr or Thumbtack, where you can find experienced drone photographers.
That's a smart move. And while you're at it, don't forget to use real estate apps like Zillow or Realtor.com to see how other listings are using photos, especially aerial shots. It can give you some inspiration.
Totally. And if you're serious about analyzing property deals, tools like the BiggerPockets calculator or Deal Check can help you evaluate how effective your drone photography is in attracting buyers.
For sure. And if you're looking at rental properties, Rentometer is a fantastic tool for checking rental rates in your area. You can see how your drone images stack up against other listings.
Nice! And for those who want to go a bit deeper, there are some great books out there. Real Estate Investing for Dummies is a classic, and it covers a lot of ground, including marketing strategies.
Yeah, and don't overlook podcasts either. There's one called Bigger Pockets Real Estate Podcast that dives into all sorts of investing strategies, including marketing techniques like drone photography.
Such a good resource. And remember, it's all about building habits too. Maybe start by analyzing just one deal a week. Just sit down, look at the numbers, and see how you can improve your listings.
That's a fantastic habit to develop. And joining a local real estate meetup can help a lot too. Talking to others about their experiences with drone photography can offer fresh insights.
Exactly. Those connections can be invaluable. And even if you feel like you're starting from scratch, remember, just start where you are. Every little step counts.
Yep. And don't be afraid to experiment. Maybe take some test shots with your drone or collaborate with a local photographer on a project.
Great idea. You'll learn a lot from the process, and it might even lead to unexpected opportunities.
And as you get more comfortable with drone photography, consider sharing your results on social media or in your marketing materials. It can really set your listings apart.
Oh, absolutely. Visuals are so powerful. And as you gain confidence, think about how you can expand your skills. Maybe even learn some basic editing techniques to enhance those aerial shots.
That's a good thought. Tools like Adobe Lightroom or even some mobile apps can help you polish your images without too much fuss.
Right. And remember, there's no rush. Take your time to learn and integrate these tools into your investing strategy.
Exactly. With these tools in your pocket, you're ready to move forward. So as we wrap up our discussion on drone photography for property listings, I think it's important to highlight a few key takeaways.
Absolutely, Mike. First off, we talked about how drone photography can really elevate the presentation of a property, right? It gives potential buyers a unique perspective that traditional photos just can't capture.
Exactly. And then there's the aspect of showcasing the surrounding area, the neighborhood, parks, schools, things that really matter to buyers.
Yes, that's such a good point. Also, we mentioned how drone footage can save time during showings, giving buyers a comprehensive view before they even step foot in the property.
Right, and let's not forget about the marketing potential. Using drone shots can help your listing stand out online, which is crucial in today's market.
For sure. And finally, we touched on the importance of hiring a qualified drone operator to ensure you're getting the best quality footage. It really makes a difference.
All of these elements come together to not just make a property more attractive, but to help build long-term wealth through real estate investing. It's about making informed decisions that pay off.
Exactly. Remember, investing in real estate isn't just about buying properties. It's about creating a legacy and taking steps towards financial freedom.
And if you found value in today's episode, we'd love for you to like and subscribe. Also, drop a comment with your biggest takeaway or any questions you may have.
And don't forget to share this episode with someone over 40 who's interested in property investing. They might find it really helpful.
Next time, we'll dive into a comparison of virtual staging apps. It's going to be exciting to see how technology can transform listings.
Can't wait for that discussion.
Thanks for tuning in today.
Yeah, thanks for being with us, and we'll catch you next time.